Hello, everybody. This is Kieran from cryptobulls. I hope you're having a great day wherever you are. Now, today I want to answer the question if it's too late to buy into Bitcoin in 2019. And this is a very special question since it gets asked often on many different threads. I've seen it asked many times, and it's a bit of a dangerous question to answer because very often the people that are asking this question are mostly new investors, those people that are maybe not familiar with the markets, and some type of FOMO pops up in them, and very often these questions happen after the price of a certain currency. For example, in the moment Bitcoin has risen up to $5,900, and this question gets asked more and more because people are fearing of missing out on potential gains, and they're wondering if it's too late to buy. And I want to clarify and answer this question, if it's too late to buy Bitcoin in 2019, or if you still got enough time. And I want to put some arguments to the table that it's definitely not too late, but I think it's important still to be very cautious. So many investors are still hesitant about Bitcoin ending the bearish period. So first of all, they're not sure if when they buy now that the price might still go down to maybe 3,000, or if they don't buy it will go up and they miss out on some gains. And it's also very difficult to find the best time to buy Bitcoin or other cryptocurrencies, and I'll also go into that and how you can what you can do to help your emotions and find the best time to buy Bitcoin. So first of all, you've got the psychology of the market and the different types of traders. So for there are permabulls, those are also hodlers, those that are always believing in the technology. They find good news after good news and just don't want to listen or look at bad news or any criticism, and that's fine. There's also the perma bears, those that are always pessimistic about the market and believe that each scenario, the bearish scenario, is the one that's most likely to happen. And you've got day and swing traders. They don't really look at the long-term aspect. Some do, but mostly look at intraday market movements. Then you've got the trend followers. Those just listen to their emotions. When the price goes up, they tend to buy at the top and they tend to sell at the bottom, which is one of the worst investment strategies. And yeah, that was one of the biggest problems and why many people lost a lot of money at the end of 2017, because they let their emotion get the best of them, and they bought in at the peak of the bull run, and they didn't want to sell when the prices sank to and they lost like 80 or 90% of their portfolio. And that's what I'm also going to try and help you with. So if we compare with the market cycles to 2014 and 2018, we've had a very long period of time where the market was trading sideways, and I believe this is also something that will occur at the end, maybe end of 2019. So it's important to be aware that bull markets, the 2017 bull market was actually started like mid 2015, and it's progressive. The prices go out a little bit and they go down again a little bit, and it's not just exponential like it happened in December. That was probably only 1 or 2 days where the price skyrocketed from 14,000 to 19,000 in 1 or 2 days. And to be honest, if you want to, the bull market takes a much longer time to evolve, and it's important that you're aware of that. Now, going back to the question, if it's too late to buy, I'm going to show you a few arguments why I believe it's not the case. So here we've got on CoinCheckup a few predictions. Now, of course, these are not These are not, I'm not trying to predict the future, and also the site is not trying to predict the future. However, we're going to look at some prediction based on real world money, and if the Bitcoin price would be a certain percentage of real world money, then it would be a certain price. And I just want to show you that even with the very low prediction level, Bitcoin would reach a very high amount if it follows the same pattern. So the first one is M0 money in the market, and M0 will be the total of all physical currency plus accounts at the central bank which can be exchanged for physical currency. And at the moment we would be around between 2 and 4%, so around 3%. So around 3%, we're about at $6,000. Should this increase, then we'll be at 32%, we'll be at $67,000. So that would be just only 32% of the whole physical currency amount. We would have a Bitcoin price of $67,000, which is very high. Now with M1 money in the cryptocurrency, so M1 would be the whole of M0. However, you would also add the values of the checking and current accounts, and now that of course is a much higher amount. That's why 32% would be already at $380,000, which is a staggering amount. And last but not least, here we've got M2 money in the crypto market. So M2 is even larger amount, so M2 will be M1 and plus most saving accounts, money market accounts, and certificate of deposit CD accounts under $100,000. So this will be physical accounts and also digital accounts of money. Exactly, and here's 32% will be around $962,000. So this is predictions based on our current money supply, and it's staggering to see if Bitcoin would reach a certain percentage of this amount, we would have very high Bitcoin prices. And if this is going to be the case, it's not sure. I just want to show what potential lies ahead of us. So furthermore, Bitcoin compared to the total money amount, so 1% would be then $2,000, and here it's just in a graph, so that would be $67,000, and with M2 that would be at $962,000. And at the moment, if we look at M0, at the moment we're at 2.8%, and Bitcoin compared to total amount of M2 money worldwide would be 0.19%, which is very, very low. Only at 2%, if we look at M2, we would already be at $60,000, and that is already mind-blowing. Furthermore, as you must be aware, Bitcoin only has a limited supply of 21 million coins, and of those 21 million coins, there's a certain amount that has not been mined yet, and there are also certain coins that are considered lost. And if you consider that, it's not a lot of coins that are left. And this is actually very important, since, so if we look at here the amount of coins lost, here's the data in another, which shows out of circulation Bitcoins, those mined 2 to 7 years ago and belonging to long-term investors. These figures reflect Bitcoins that are truly lost and not hacked or otherwise stolen. In these cases, of course, the Bitcoin is not lost since the thief has control of them. That's understandable. And the calculations, the estimate is around 3.8 million coins have been lost since Bitcoin was created, and that's a large number. And why I want to mention this is that since Bitcoin is very limited, and there's only a certain amount of Bitcoins available to buy, and we look at the amount of millionaires that there are in the world. Now, of course, this is a very interesting comparison. And if we only look at the United States, the United States has 17 million millionaires, so that's 41% of the the amount of millionaires in the world. And even if you just look at the United States, it would be very, very difficult for each millionaire to own one whole Bitcoin. Think about that. There's not enough Bitcoins in circulation for each millionaire in the United States. The whole world, then you can just forget it. Like China has 3.4 million, Japan has 2.8 million, and so on. So as soon as millionaires want to diversify and they look at different cryptocurrencies, probably the first one they're going to be looking at is Bitcoin. And when they realize that it's going to be very difficult for each and every one of them to buy a whole Bitcoin, then the prices is definitely going to skyrocket. Of course, this is speculation. However, if an asset class is limited and people believe in its value, then of course the price rises. The same happens with gold. I mean, people buy gold because it's an asset class that has value and it is recognized. So let's continue. I want to just look at the Bitcoin rise and crash from 2011, 2014 and 2018. And in my opinion, if we compare the current price, we're around at $6,000. It's a bit of an old chart. We can click here and then we see the updated price. We're at the resistance level of $6,000. And if we look at the 2011 chart after the bear market, we have a long period of sideways trading, and the same happens with 2014 bear market. We had also a very long time of sideways trading, and as you can see, even though the price goes up on occasion after the accumulation phase, like the phase where the volatility is relatively low and sideways trading is called the accumulation phase. And even after this long accumulation phase, the price doesn't just skyrocket up as it did at the end of 2018. It goes a bit higher and then a little bit lower and then it continues. So what will probably happen is we're going to have certain phases of a bit of growth, and then the price will go down to the previous high and so on. And at the moment, as I see it, we're probably going to have a bit of a back and forth between different support levels, maybe the $4,000, maybe the $3,000 support level and the $6,000, and we're going to have that for several months. So that's why, in my opinion, you definitely didn't miss out on your opportunity of buying Bitcoin or other cryptocurrencies. You're definitely going to have a lot of time to do that. However, what I suggest is that you don't just listen to your emotions and that you dollar cost average. So maybe if you've got a certain amount that you'd like to buy, then you can just set, for example, $100 or $1,000 a month aside, and then buy maybe either every day or every week a certain amount. And by doing that, you will manage to keep your average buying price as low as possible. And the thing is, when you dollar cost average, you mitigate the risk that you miss out. So if the price goes up, that's great, you've made some profit, and if the price goes down, it's great because you can lower your average buying price. So all in all, it's a win-win situation, and you don't have to rely on emotions and fear of missing out when the price just goes up and wondering, okay, should I just go all in now? And that's definitely not a good strategy to do. As a last graph I want to point out, and I mentioned before the cycles and the accumulation phase. So here you've got a bit of a better overview. This chart is from Brave New Coin, and here we've got the different bull runs. So the first cycle, second cycle, the first cycle was 322 days. The second cycle was 903 days in 2014. So this was 2011 was the first bull run, 2014 the second bull run. So, and we had 1,490 days was the third bull run. And as you can see, that's what I mentioned before. Many people, they believe that the bull run was just in 2017. However, it started in 2015. So that means you would have had at least 1.5 years time to accumulate, even though it might not have been at the complete top. However, you would have had that amount of time to accumulate and increase your position before the bull run completely started. And I believe that's going to be the same thing. We're going to have a long reconciliation and accumulation phase, so that will let you also have enough time to accumulate and increase your position. And predicted is that the fourth cycle will be around 2073 days, and that would mean in 4 years time we would have the next bull run, which is a long period of time for people to wait. That's why dollar cost averaging is, in my opinion, the best way to increase your position. That was it for today. I hope you learned something new, and as always, trade safely. Don't risk everything. Definitely don't take out any loans to buy Bitcoin, and this is also not any financial advice. Just make sure you know what you're doing and trade safely. Have a nice day and catch you on the next one. Bye bye.